It's always inspiring and mind-blowing to hear the successes of my students. A long-standing student of mine, Atra from Kolkata, has just made his first $10,000. Yes, his first $10,000 using his own trading strategy. Hi, my name is Jamison, and today I'm going to be showing you that very strategy. Yes, Atra's strategy that he used to make $10,000. I'm going to be sharing it with you to see how you can use it to make your own money. So I want you to jump in with me and let's dive in, and I'm going to be showing you how you can also do the same by watching this video till the end. Just stick with me and I'll be with you. Okay, all right guys, so most of us are in trading, follow the trend. The price often moves in one direction, although sometimes there are local pullbacks, mini reversals in the opposite direction. So the trend is usually predictable. It has like rather sudden and therefore loss-making retracement points. This strategy solves that problem. So let's set up the Atrava system. Follow my lead, Keltner and momentum on the chart. For Keltner, set the EMA period 18 and remove the background fill. Okay, done. So we'll leave momentum as it is and move straight to analyzing the signals. Look at the color on the bars at the bottom. If momentum is green, the asset is rising. Conversely, if momentum is red, it means it is declining, depreciating, that means it to fall. So this is our first condition for trades. Right now, by the way, it's red and the chart is declining. But that's not enough for us. With Keltner, we look for bounce points off the channel boundaries. They almost always indicate a market reversal. So another important signal, a breakout of the central channel line, it can serve as an independent reason for a trade. In any case, we always react to price movement near the channel boundaries, as this almost constantly gives us a reason to enter a position. So this works both ways. The price moves forward towards a reversal, allowing us to regularly open trades, even within a narrow channel, like here, as you can see. During a more pronounced trend, it's even more convenient. So the key to the Keltner signal aligns with momentum. We can trade sideways movement, trends, and even corrections within the trend. We trade everything. So here our indicators diverge. So for the first trade, I'll look for another entry point. We will continue for now. So perfect, just enter the short on Euro versus Canadian dollar. This is an ideal situation to start the session. So you see for yourself, the chart is falling. Momentum is also declining and in the red zone. The asset has long existed the Keltner boundaries and breaking through the key level here. And here's the level where the price should gradually reach. It's quite possible we'll see this during trading. Well, now all that's left to do is wait for the trade. The trade outcome, it's starting extremely well, by the way. We've just hit the first level. I showed you, and it seems so far away. This often happens when you perfectly understand what's happening with the assets. It's not just a working strategy that helps, but also experience, guys. Like, you need practice, experience, and all that. Okay, so this trade is a total seller dominance. No need to worry about it. Yes, our first profitable position today. We've passed the key level and now the price is deciding where next to go. There aren't too many options for us here. While there's time, I'll increase the risk to $1,000. If nothing unexpected happens now, I'll re-enter the market immediately. Always good to take a short pause. Okay, so I'm back in the game. Yes, we're entering on a green candle here, but don't let that confuse you. For us, this is more of an entry from a better position. You could say the market is giving us a discount. In other words, it's better to enter higher during the decline and lower during a rise. This way, you give yourself a slight advantage. So within the 1 minute expiration time frame, many traders prefer opening trades strictly at opening of the new candle, but I don't think that's a hard rule to follow. It's flexible. So both approaches have their pros and cons, of course. In my experience, they produce similar outcomes in the long run. I'm just one of those guys who doesn't like waiting until the end of the minute. The asset is keeping us on edge. Time is running out. Still, we've started moving downwards, so it's not all bad. Just a few more seconds. Okay. And perfect. Second profitable trade in a row, guys. Now let's switch assets and move to a new chart. So we're entering the short here again. Trading sideways price movements. Momentum is declining and the price is currently breaking out of the channel downward. Of course, I'll show you the target level Though many of you have probably already learned to spot these levels by eye. For the rest, let me explain again about trading levels. I keep reminding you they're extremely important in trading. They help you understand where the price is headed. Levels are like stops or checkpoints along the entire route. If you look closely, they encapsulate the whole chart. They are all over there if you look closely enough. Without them, the market seems random. But once you draw the levels, everything suddenly becomes like clearer and starts to make a lot more sense. The price either bounces off these zones or breaks through them. Our job is simply to spot these during our trading. We're almost closing this trade. Okay, another profitable trade here. To reinforce what we learned, I'll find another setup, and this time on the fresh chart. Whoa! Now we'll test the real system in chaos. So economic data just dropped. I'm expecting a decline here since the asset broke this level and exited the Keltner channel. But don't do this if you're new, of course. If you're just starting out, it's better to avoid these sharp spikes. Most of the time, they are uncontrollable risks. Most of the time. What's happening on the screen right now is called volatility. Huge sums of money have entered the market, so price is being pushed by massive demand and supply. I recently did a detailed breakdown in my Telegram channel about this, about the dangers of trading during news events. If you want to understand how those how to track economic data releases so you don't lose everything, all you have to do is very simple. Subscribe to my Telegram channel. The link is in the description below. So yeah, the storm has passed and quite favorable for us. Great, the trade has closed in profit and the balance is now well over $3,500, as you can see. Awesome, but I won't take any more risk on such an unstable market. I'm wrapping up the trading session here. Oh yes guys, as you've seen here, this strategy absolutely deserves your attention. Wow, it's crazy. I've traded in it in ranging markets and trending conditions, even profited from during volatility spikes, guys. As I showed you in the video here, as you can see, just 2 indicators. Yes, just 2 indicators, guys. It's blowing my mind. I unlocked all the market scenarios brilliantly in it's brilliant in its simplicity. And my friends, I'm thrilled that my students have come up with their own trading schedules and platforms that I can even use, and I'm even using it to make some money. So do you want me to analyze your trading patterns and your trading systems? All you have to do is write to me, send me a message on Telegram. My contacts are there and I'll be there waiting for you guys. On that note, I would like you to like, subscribe, share, and do all that for this channel so that we can grow and we can keep making more of these videos to help you guys out. And that'll be all for me. Peace.